Okay, y'all, we just want to look at just a couple of setups for this week, just so y'all can see my process and how I identify some of these setups, okay? Give me 1 second. I'm gonna share my screen. Somebody let me know if you can see it. Can y'all see?
Yeah.
Okay, great. Now what I'm gonna do, y'all, I'm gonna mute everybody so that we can make sure we can hear. And if y'all want to say something, of course, you can always unmute, okay? You can always unmute. So as y'all can see, there were some really good setups last week. This is one, this is GJ. And if everybody does not have your setup like this yet, let me know so we can walk you through and get you set up, okay? I've got a video on it. And if that can't get you there, then we can do it on our one-on-one. But our whole basis of it is just to review. We need, whenever we see, we get notified by the system of a potential sale opportunity. When we get in, we go through our next step. We look to see if there is rejection for 4-hour structure. In this case, it is. We got an extra bonus here because this white one represents daily structure. So now, let's retell the story. We've got a 15-minute entry recommendation, backed up by the 4-hour and backed up by the daily. Those are two very strong time frames. So I have high confidence that this is going to go a pretty good distance. Okay. So once we do that, then what I always do, I mark up, I put a vertical line right on that arrow and I see what lines up. Okay. As we can see, we got a red trend line, got a red short-term trend line that's bearish. We have the long-term trend that is bearish, but this right here is bullish still. Okay, this is our oscillator. Okay, so this would not be the optimum. This wouldn't be the optimum entry. And then we also know that our last thing that we use is the cross of this. Okay, now in this one right here, this is one of the nuances that I talked about, in that there are about 7 areas of confluence. What I'm starting to see is that depending on the pair, like this pair, the real moment to get in and this changes from pair to pair, excuse me. The real moment to get in was when it broke right here. I'm sorry, guys. Was when it broke this 0 line and it went bearish here. Okay. And as you can see, this momentum came in the market right there. And that was your real move. Okay. Had you waited to right here, you would have went in a little drawdown, but you still would have made your pips. Okay. Now, this is indicative of the fact that GJ was a little jittery on Thursday and Friday. Okay. So, but long term, I still feel comfortable with this going in this direction. Now, personally, I don't believe this 4-hour structure is going to hold. I don't. It comes up, is rejecting, but I think it's still strong. It's still showing long-term bearish strength, still bearish. I think this is just a pullback, and I think it's going to continue going down. That's just my personal belief. Okay. So, but what I wanted to show you guys, and I think I just released a video where it talks about using these support and resistance lines that Simplicity has, and you can access those like this. Hold on, I got a new mouse, guys, and it's jittery. You can turn it on by display support and resistance. Okay, so that's how we display it. And I used to not use it because I thought, man, it's just crowding up my screen. But I found out that these are excellent areas for take profits. And so in this instance here, if you have gotten in right here, if you would have gotten in right here after it broke green, 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 and it broke this algorithmic trend line crosses this one. This would have been like your entry. You would have like a 22 pip stop. And as you can see, it ran 78 pips, okay? So that's a more than 3-to-1 trade, okay? But of course, when you got in, you wouldn't have known this was going to happen. But you can predict it to a degree, because if you use this as a take profit, if you use this as a take profit, and you use this as a take profit, okay? One thing I always say and teach, money has memory, y'all. So it will always go back to an area where it's been before. And y'all see where it went? It went there and consolidated. Hit that point, consolidated a little bit. Went up here, consolidated a bit. So being that you knew that right here, there was a lot of strength from the 4-hour and the daily, it going up, it's safe to assume that, no, you're going to try to just get a total home run and one big thing before pullback. No. But it's safe to assume that you could get these 7 to 8 pips, because these are strong areas where price had been before, okay? And because you were able to get this short stop loss, you are then able to get in with a higher lot size. If you got in with $1 lot size, now you're talking about, $800 if you took the whole thing. Or you can scale out, okay? And that's what we're going to talk about a little bit Monday and with doing the risk management, the scaling out. People always are fixated with managing when you're in drawdown, cutting your losses, blah, blah, blah. And that's good too. But to make sure you're profitable, you need to get out. Don't try to ride this whole thing up here. Okay, I've done that before, man. I've been $800 in profit, man. I want to see how far it's going to go. Want to see how far it's going to go, and then that thing starts turning, and then I could have got out with 800, end up getting out with 450. I left 350 on the table because I was trying to squeeze all the juice out of it. When the fact of the matter is, if we trade properly, when we come to the market every day, and if we are consistent, it should pay us consistently. So you need to take some profit here, shave some off here, leave a piece running. And you may not hit your 800, but you might have got out with 675, but it was a safe 675. Okay. So that's just my quick little lesson on that. But let's look at some setups, y'all. And here's my process. My process is this. I simply start here and I look for an arrow, and I look for support that it's rejecting an area. Okay. Now, if y'all remember Thursday night / Friday morning, I told y'all USD was going to be very strong. All the USD pairs moved except for USD Swiss. Okay. It consolidated the whole day. That's a good thing, y'all, because consolidation precedes breakout. If you look right here before this breakout, look what it did. Jump, 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 and then boom. So the longer it consolidates, the greater and the stronger the move. Okay. So what I anticipate this to do, I anticipate this to go down, do a second touch. Because if y'all look here, y'all remember the rules of the strategy, right? It has to touch a level of and reject the level of structure twice. How many times y'all see did it reject that structure?
Once.
So it's due for another touch. So I believe it's going to come down here, and the system is saying so, right? It's going to come down here. It's going to touch, turn around. When this breaks that level, when this breaks this level here, let me get my annotation out. When this breaks this level here, we should be able to put a nice stop loss under here. That's very tight, maximize our lot size, and ride this all the way up. USD Swiss moves very slow. but it pays very well. It pays almost $11 a pip if you put a dollar lot in. Okay, so what it lacks in speed, it makes up for in what it pays out. Okay, so this is one that I have on my radar. In fact, I had a pending right here on Friday in case it broke out because I had to go to the dentist. I was wasn't able to monitor the trades live, so I had a pending right there just to pick me up just in case. Okay?
Can I say something?
Yes.
Okay, let's go back to that stop loss again.
Yes, sir.
Now you said you said just the opposite of what Uncle P says.
Yes, sir. And
you know what Uncle P says about them tight butt stop losses.
Yes, sir. Now, I'm not, Uncle P is not wrong. But what I'm doing, see, what Uncle P will do, and again, I'm not talking about him, I'm not saying he's wrong. He gets in right here when all things line up. Now, he doesn't have this oscillator, okay?
Mm-hmm.
And his solution to that is I'm putting it behind here. Let me get my annotator out. I'm putting it behind 10 pips behind this level. And most of the time he's right. It doesn't come back and touch it.
Mm-hmm.
But what I do is with our system and our extra levels of confluence, I wait until it breaks out of this structure here. And as a result, I use these levels of support and resistance that Simplicity provides as a buffer. Because see, once it comes down here, the probability that it's coming back down there again is very low, Mr. Raleigh.
Mm-hmm.
So once it breaks, and what I want to show you is this. Just look at the history of when this if you see right here,
yeah,
when that blue, when the Simplicity trend line crosses the 50 smooth moving average, rarely does it come back. And okay. I don't look, even like, see right here, when it crossed it, it dropped. When it crossed it, it dropped. When it crossed it right here, it kept going.
I'm gonna have to work on that.
Yes, sir.
I've gotten so used to him talking about stay away from those tight butt stop losses.
Right.
And you know, say for instance, like you're at the one of the zones, okay? Let's just say you're going for a sell. He'll tell you to put that stop loss over the top of the red box about 10 pips above it.
Yes, sir.
That's what I had gotten used to, but now what I'm going to have to do is I'm going to have to reprogram myself to understand your logic.
Yes, sir. And what we have, and I know you just joined us. I have, if somebody has it, if y'all can post it in the chat, the 7 areas of agreement. See what we're doing, Mr. Raleigh. We are waiting later than Uncle P jumps in what he recommends. Okay, and by us waiting later for more confluence or more areas of agreement, like right here. I'm gonna go to another pair. US Swiss just moves funny. Let me go to Euro AUD. I know this got more flow to it. Okay, so let's see. Let's look at this right here. This is a traditional 415. Okay, technically, based on the rules as Uncle P teaches them, this would have been the spot you would have gotten in. I'm gonna move it back just a little bit. Right here, green is green. You got this matches this green. No doubt then it probably would have been, price would have been in the box for the 30-minute. Okay. But you can clearly see that prices in consolidation, it would go. And as you can see, this right here, the simplicity trend line, it never crossed this 50 moving average. It flirted with it. It flirted, it flirted, it flirted, and it did not penetrate it until right here. Okay, so all of this right here, this is that SpongeBob. Well, people talk, but guess what? When all this happened right here, you would not have known that this was coming. So that's the reason we wait till the latest possible moment when this trend line crosses over this 50 smooth moving average. And guess what? Look, when I didn't even look down. I just looked at when it crossed, but look at everything else that's in alignment. Short term is green. Long term is
Okay,
green.
now, okay, now are you saying, okay, right there on the 50 SMA,
Yes, sir.
did you wait till that candle crossed and closed?
Not necessarily the candle. I'm looking for the trend line to cross and clearly be over that line.
Oh, okay.
Because see,
Okay.
see, here's the thing. Here's the thing. The candles can cross, because if it's based on candles, we would have got in right here. See, hold on. If it was based on candles, we would have got in right here, because the candle was over, but the trend line wasn't. Okay.
So you're placing emphasis on the what do you call it,
the simplicity trend line, the one that
the
turns
trend
green
line?
and red.
Okay, so you're placing emphasis over the trend line crossing over the 50.
Yes, sir.
That's what you're saying?
Yes, sir. It's not necessarily the price. Now I'll tell you this: the trend line is a mathematical equation measuring 50, the previous 50 candles. Okay, so it's a lagging indicator of where price has already been. But we can't trust the candles all the time, because if we were to trust the candles, we'd be in this mess right here. So that's the reason we wait for the trend lines to cross. And when you
cross
see
over the 50.
Yes, sir. And when the trend line crosses right here, it never goes back.
Okay.
And so as a result, and we can work on this more one-on-one, Mr. Riley, but as a result, Simplicity already gave you a level of structure, and you can put it safely under that. Let's say you want to put it 20 pips, 20 or so pips below that structure. Okay. Well, that's a big difference between 10 pips. You're talking about 60 pips versus 20. Okay. And we'll talk about this. We'll talk about that tomorrow, because here's the beauty of it, guys. The way that I teach, I only risk 1% at a time. I don't do nothing crazy like 2, 3, 4%. You don't have to, because we let our stop loss determine how big our lot size is. And I'm going to show you that tomorrow. I've done it with some of you private in our one-on-ones. But I'm going to show the group tomorrow how we can maximize with just 1% risk. We can maximize our lot size. Okay, and with Euro AUD, with let's just say that entry with like a 15 pip stop, depending on how much you're risking, I can risk up to maybe $1.25 lot. And if that's the case, this joker ran 96 pips. Okay, so you're talking about $600, because I think Euro AUD pays about $8 and something a pip for a standard lot. Okay, but the key to it is, I don't believe in I believe in the safest and closest stop loss. Okay. Now, if you had gotten in right here, would you necessarily been wrong? No, you would not have. But your lot size would have had to be so small, you would have had to ride this thing all the way up here to get the equivalent. You would have had to ride it 150 pips for what you could have got in these 80 or 90. It'll make sense tomorrow, but and so the way of strict what do we call it? Strict risk management.
Mhm.
It forces you to look for safe and tight stop losses. We don't just go for tight ones just for tight sake. We need to go for safe. And I've my history of studying it, this is a safe entry to have a tight stop loss because again, this is probability, nothing is guaranteed, but the history of probability when these moving averages cross, see, moving averages can serve as dynamic support and resistance. And as you can see, the price came down, it touched it, but it respected it and kept going. Respected it, kept going. Respected it, kept going. Respected it. It even came down here and touched this along with and kept going. Okay. So moving averages is structure as well. And so we use this as a level of structure to be behind, and we go with the probability of it because the history says that when these cross, they don't come back. Okay. But like I said, we'll get into that. And again, we're scheduling one-on-ones with everybody. It's a list. It's a sign up in the list to where we can work with everybody individual. Okay. Hold on one second. I'm just going to erase all my drawings. Okay. So since we're here on Euro AUD, the market is live, right? But what do we see? Somebody talk to me.
Rejection.
Yes.
Consolidation.
We see both. That is correct. Now, both it's a white arrow and an orange arrow on top of each other. That's a good thing. That means daily structure is being rejected. That means 4-hour structure is being rejected. So what we do is we put this on our watch list. If you all have the Simplicity scanner, you can put that in your Simplicity scanner, okay? So we're not going to jump in. We're not trying to be Nostradamus and predict anything, but this has piqued my interest. And so I'm interested in what this will do. Okay, so we put it on our watch list, and then we wake up in the morning, we check it out again. All right. GBP USD had a great run. I caught that yesterday. I mean, on Friday. It should break this level and continue down. But to be honest with you, I'm not interested in these because the further I'm interested in catching these every day. You can catch these breakouts on the 15-minute every day, guys. Okay.
Mhm.
And it's enough to pay you very well. When it gets this far, I describe it like this. There is a reason that if you shoot somebody, not trying to be too graphic, there's a reason that if you shoot somebody point blank range, it does like immeasurable damage. Why? Because the velocity of that bullet is stronger when it's first coming out the chamber. Everybody agree with that?
Yeah.
Okay. This is a bullet coming out the chamber. When a trend launches, it's stronger, it's more direct. Those are easy pips. That makes sense? These are easy pips right here. The further it gets away from the initial launching point, the more erratic it gets. The more unpredictable it gets. It could shoot back up, it could go back down, it could go sideways a little bit. You see what I'm saying? So what we want to do, and it happens all the time, guys, look at this. Look at the launching point. Y'all see when all these things lined up? What did it do? It went straight and direct. That's that bullet coming out of the chamber. And that's what I've learned to catch every day. Look at this. Bullet coming out of the chamber. Now, and see what it did? The further it got away, it got a little more erratic. Okay. Then it bounced off and it started going down again. Look at this. Bullet came out the chamber. Boom. Bullet came out the chamber. Now that don't seem like much, but if you know that's going to happen, that's 40 pips. 40 pips with a dollar lot size, that's $400 for a day. I'll take that and stack that every day. Look at this. Messed around. When it crossed, look how everything lined up. Look vertically, y'all. Everything's saying bullish. When it broke, that first impulse went 93 pips. That's all you need, y'all. And y'all, this happens every day. These the same charts y'all looking at, right? I ain't making nothing up. I ain't making anything up. I ain't got no special chart. All right, now, y'all talk back to me now.
You see it. I see it. It's
right?
good.
So it's happening all the time. Look at gold, man. I'm this stuff works.
You kind of starting to get me excited now.
That's good. That's what we want. Look, when they cross, you know, gold does its thing. That don't look like a big move on gold, but look, that's 86 pips in gold. That's enough. That's enough to sit down for the rest of the day. You got the right lot size. Okay, so y'all, it is, you know, it's the power, like the video I just did yesterday, the power of multi-time frame. When you got those things pushing all the same way, it really is just easy trading. And I'm not trying to stay in to get, no, when I first started trading, I used to be impressed, and I wanted to get 150 pip run. I wanted to get a 230 pip run. I mean, I used to be impressed when I saw people do that. When I realized, you know, if I got the right lot size, a 30 pip run can pay me just as much as a 150 pip run. But you got to get your entry tight. Look at this entry right here, y'all. I mean, when this thing crossed, look how everything lined up. Red, 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 red. And if you do your entry right there, your stop loss on this is nothing. Let's just round it up to 20 pips, just to be conservative. Well, the first impulse went down 44. That's more than 2 to 1. If you went down a little further, you know, you can go down to this level. That's 88. That's a 4 to 1 trade. You know, and so we see about to happen again, right? What do y'all see right here?
It's bouncing off, I think.
Right. Okay, so people have been asking me, do these repaint? Yes, they do repaint, but they're going to repaint on lower time frames. We're talking about 5 minute, 15 minute, 1 minute, of course, okay? But y'all, these arrows are not 15-minute arrows. These are 4-hour arrows, and they are daily arrows, okay? So we're not going to jump in right now, but by the time a simplicity arrow shows up, it may have been 8, 12, 16 hours that this thing has rejected. So by the time the 15-minute gives you a signal to come look, it is well-established rejection. Does that make sense?
Yep.
So I feel fairly certain by the time the simplicity arrow comes in and tells me to look, that this is well-established rejection. So I'm not worried about a higher time frame pushing down or pushing up against me, okay? Because all that stuff has been sorted out by the time I get my 15-minute notification.
Hey, Tony, I got
Yes.
a question. I know it's the system is really designed for the 15. Have you tried it on any of the, or is it, does it work on a higher time frame such as the 30 minutes or the 1 hour?
Yes, sir. It does. The only reason I do 15 because you just get earlier and safer entry. But I will. This right here is the 30-minute of the same currency pair. Okay. What we do, we just wait for the same confluences. Okay. We put a vertical line there. What do we see? We see red. We see it about to cross. We see red. We see red. We see this descending. Okay. So it looks good. This is perfect right here. I'll tell you this oscillator 90% of the time is in alignment with these two moving averages crossing. And this is universal for every time frame, guys. And as you can see, had you gotten in right there on that candle and use this right here, you see this green one? Use this as your level of structure. Let's put it well above it. Let's just put it 20 pips back. Okay. You put it 20 pips back on that entry, you would have well made your 1-to-1 and then some. And that's waiting on the 30-minute. Okay. If you want to do the hour. And this is a great question, by the way. See the hour entry? Let's see what lines up. Yeah. That's a good entry. This would be the better one. I'm sorry, guys. This would be the better. Oh, it's right here. This would be the better one when it cross. When you see the cross. And what you do is you take your entry, you find the most recent level of structure, you put it well above it. It's because this is the hour, we respect it a little more, might put it 30 pips back. Okay. But if we take it all the way down to the bottom, we got 103. So yes, to answer your question, you could do it on any time frame because it's all telling the same story. That's why I love these, because they show up on any time frame. But I
But you know what?
found the 15-minute to be more stable. Somebody was asking something?
Yeah, I was gonna say, briefly, you and I had a chat. I told you I've been studying a lot about the market makers.
Mm-hmm.
Okay, now using your strategy here, and the way you place your stop losses and the way you use your trend setter, did I say that right?
Trend surfer.
Trend surfer.
Uh-huh.
Okay, now how do you stay out of the way of the market makers? Because they're out to get you
Well,
any way they can. They're out to get you any way they can.
yes, sir. Now, here's the thing. By waiting for this action to happen, this right here was the stop hunt. See that up there? Hold on.
Mm-hmm.
That right there was a stop hunt. And
Yeah,
so
okay.
when we wait to this last moment, we're basically waiting until for price to break out on that respective time frame. And when this happens and we let the tools tell us it's time, there is a high probability, there's never a guarantee, but there is a higher probability that it's going to continue this way because you what it is, Uncle P says that he sets his arrow to 13 or 15 so it filters out the noise.
Mm-hmm.
What this is I'm teaching you guys is just extra filters. It filters out even more noise and gets you right at the optimum place of entry. That's all it's doing. And so the market makers would have done all they're going to do. Okay. Let's see those two right there. That's what you call a scissor top. That's where they went up twice to try to get liquidity. They came down. They went up one more time. They couldn't. There were not any more orders up there, and so they went down. And that's a more technical jargon. We're talking about liquidity pools and all that stuff. But that's all that was. That was a liquidity grab, and they. Hold on, I'm sorry. You see this huge candle right here? That's either a news candle or a liquidity grab candle. It went up there. It probably a news candle first. They went back up to the same spot, went and got orders. 2 more times, bam, bam. Okay, we done. We bled y'all dry. Gonna do it 1 more time. No more orders up there. Then okay, now we're gonna give up pips. That's all they're doing. And this stuff happens over and over again, y'all. Over and over again. So what I invite y'all to do is, a lot of times we can be so close up on charts. I want to invite you to zoom out so you can see the patterns. and you'll see the same things. Sometimes y'all, the same things happen on the same day of the week. I am not lying. If y'all put those day separators up, it's okay. This is Monday, this Tuesday, this Wednesday. Look at the pattern. The same thing will happen week to week on the same day. But a lot of times we're so busy looking at stuff, we don't see it. Okay. So I'm gonna go through a couple more, guys, because we got class tomorrow. But I'm enjoying the question, y'all. It's a good question.
Can I say
Okay.
one thing?
Yes, sir.
Okay, now this video is for our use, right?
Correct.
Okay, I want to give a big shout out to David Brown.
Is he on here?
Yeah, he is.
I'm on two calls at the same time.
You remember me, don't you?
From Miss Young's group.
Right.
Yeah.
All right. Good to see you.
Good seeing you too, sir.
Okay.
All right. So hold on one second, y'all. Just give me 1 second. Wife calling. Okay, gentlemen, I'm sorry about that. So what we're gonna we're gonna just do a little flurry going through, guys, and look at some pairs on the 15-minute. Now, this one right here, it says that it's about to go up. I would proceed with caution with this because it did not hit the bottom of the box. Okay. So it may pull back some. I don't think this is a deep permanent pullback. So will it pay some pips? It very well may. I just think there's better opportunities out here than that. Okay. GBP CAD. All right. This is one I would put on my watch list. Okay. I will put this on my watch list. All right. It ran healthy. It should do a healthy pullback probably to right here. I'm thinking this level of structure. That's one you want to put on your watch list. Again, we're not jumping in anything right now. We're not jumping in anything right now. We're just looking to see what's out there. All right. NZD CAD, this thing is, there's a lot of downward pressure on it. I don't know if I would mess with it, y'all. It's real kind of cat scratchy. It's not any flow to it. There are better opportunities. And your eyes will start to get trained with what to look for. This is NZD Swiss. It's rejecting both 4-hour and daily. Okay. Now, This is why I say it's still rejected 4-hour and daily. This daily is in effect until we see another white daily up top. Okay, on the way down, we didn't see a white one, so this daily is still in effect. Okay. So we're gonna look for an arrow here. But if it's in between these boxes, I don't trust those. As you can see, it didn't run far. I only take arrows that are either in the box or slightly above the box or below the box, but I don't take them in the middle like that because they aren't reliable. They usually turn on you very quickly. And as you can see, that's what happened. Okay. I don't normally get in these because the run has exhausted. Is like I said, the further it gets away from the bullet gets away from that chamber, the more unstable it becomes. Okay, this may be a good one that, be honest with you, it may start jumping tonight. I'm not sure. EuroCAD, well, it'll probably be in the morning. Probably going to consolidate, may even come down, and it's going to jump in the morning. It's setting up really nice. Okay. So we just need a couple other things to come in alignment, but the arrow is already in. This needs to cleanly cross this with all the other areas of agreement. If it doesn't, we stay out of it. See all this SpongeBob SquareHead, this sideways, we don't mess with that. We want clear break. Just like this one, when this one clearly broke, it kept going down. Euro NZD, this run has exhausted. I don't trust it. Again, the further it gets away from the gun, the more unstable it becomes. Okay, this one, it's a little indecisive, y'all. I ain't gonna lie. Like you want to give up some, then go back. I wouldn't fool with it. There's too many other pairs out there. It's AUDJPY. This is something you can watch. All right. I think the US pairs. This one is a very good one to watch. US CAD. I believe that US dollar is going to continue in a little bit of strength, at least for the first half of tomorrow. There should be some good run out of this, but we need everything to line up. Okay. Now, in this case, it already has broken. Y'all see this, right? It already has broken. What it's likely going to do is come back and retest this line and then going to continue going up. So for me, I likely, and I'm in my demo right now, so I will do what we call a buy stop. I'll just, when you're ready to break out, I'm not going to stay here and watch you all night. When you're ready to break out, just pick me up and keep going. Okay. Then what I would do to take you through that, I would put a stop loss 1.24. I'm just gonna put it up here. 1.4300. And y'all see that line? Y'all see that line jump up? But I wouldn't keep it there. I would likely put it right here under this level. Okay, so I'm risking 37 pips, and then I can put a take profit up of 1.25, 200, just to get it up on the screen. And now I can take it up to this level. So I'm risking 37 to get 48. And that's a whole bracketed order. That's what we call a bracketed order. Okay. When I've got my entry, I've got my stop loss, I got my take profit. That's a whole bracketed order. And you can go to sleep. And if it gets you in, it gets you in. If it doesn't, that's fine too. But what you set that up in case situation presents itself and you want to take part in that move. Okay, but that is a good setup. This one, it came back and touched. I would say this one is almost too far gone. If you wanted to put a pending right here above this level of structure, you could, but I would put a very small amount because it's almost exhausted. The only reason I'm slightly tempted is that it pulled back significantly. So usually when it does, it's going to push up to the same degree. But if you were interested, I would put it above. Y'all see how these are instrumental. These levels of structure that simplicity gives. Saying, hey, when it breaks out this level, it should continue going back up. All right. Looking at let's look at it. Indice right quick. This is pretty much exhausted. I wouldn't trust it. Not on a 15-minute. It's too unstable at this point. Your NZD, same here. It's exhausted. I don't know if y'all realize, but I like fresh setups. I like these when they're fresh. When it's gone too long, it get herky-jerky like this. And it still could pay you, but it's just, I found in my trading career that I've lost more when I traded here than when I traded here. It's just too unpredictable. So that's the reason I'd rather take this first impulse, take my money and go. Or at least leave a little amount to keep running. But I've gotten the majority of my profit already. Okay. Anybody got any questions? I'll let y'all have your Sunday back to yourself. But want to just jump in and do some quick analysis on some stuff.
Yes, Tony, do you, I know Uncle P talk about trading in the London and the New York. Do you do any trade in the Asian session?
I do. Not because I want to, but if I'm following a particular pair, let's say NZD JPY. You know, and I talked about this a couple of weeks ago, but market timing is very important. And a lot of times, a lot of reasons that we see setups that look great, but they don't move yet is because that the time is not conducive for both countries' currencies. For instance, at 9 o'clock, I'm in Eastern Standard Time. So at 9 o'clock Eastern Standard Time, that's when the Asian market opens. I think 8:30 or 9. Well, New Zealand opens with Australian market. So now you have two countries whose markets are open during the Asian session. So a lot of times with NZD pairs, with AUD pairs, and some JPY pairs, you will see significant movement even in the Asian session. So, but you also will see a pair like USD CAD, Canadian dollar, you'll see it just consolidate. Well, the reason being is that United States and Canada are in the North America, and all of their banks are closed at night. So, we're in the foreign exchange market where banks are exchanging money. The banks are the ones that make the currency pairs move. We don't make a move. We don't have enough money to make the market move. They do. So when their banks are closed, you're not gonna see a lot of volume. Even if you see a great setup, if you don't have the volume for that setup to happen, it'll just consolidate. So that was a long answer to your question, but yes, I do trade during Asian when it's a right setup, and when it's the right pair. So I don't look for US pairs unless it's USD JPY. Possibly. I don't look for US or Canadian pairs or Euro pairs to move at night because the banking institutions just aren't open. Did that answer your question?
Yes, I appreciate it. I mean, I know, some of the Aussie peers and the Asian peers, usually make moves, in the evening hours,
Mhm.
when a lot of the other peers, don't really have any action. But I do work, and I'm just trying to find a lot more time to be able to do things,
Yes.
And a lot of time the evening hours is a lot more easier for me than getting up in the morning at at 3 o'clock in the morning, so.
I
But
understand.
you answered my question. I appreciate it.
Yeah, you're welcome. What time zone are you in?
I'm on Eastern.
Okay, great. I will tell you this. The time when the arrows come in, like this one came in like 9 o'clock at night. So this is not a good representation. Let me go to a pair that would move in London. Okay. This came in at 1600 hours. So 1600 hours would be 9 o'clock a.m. Okay.
Mm-hmm.
Eastern Standard Time, but a lot of times simplicity arrows will come in at like 4 in the morning. Okay. Like this one, let's see what time this one came in. The system time says this came in at almost 10 o'clock at night. Okay. But it didn't break out until 1600 hours, which is 8 o'clock. No, it's not. No, it's 10 o'clock, 10 o'clock a.m. Eastern. So there is a wide disparity of time a lot of times between when the arrow comes in and when the setup that we look for manifests itself.
Right.
So the reason I'm saying that is you may not have to wake up 3 and 4 o'clock in the morning like you think you do, because we're waiting for this setup after this comes in. And as you can see, this was probably about 4 or 5 hours later that it happened. And so I'm learning to try to sleep in a little later. Okay, because I used to be the one that woke up at 3 o'clock at London Open and I wanted to see the 3:30. But now that we're waiting for more confirmations and we're waiting for more things to be screened out, we really can, I'll be honest with you, a lot of things break out either at 8 a.m. Eastern when the New York Forex market opens, or at 9:30 a.m. when the New York Stock Exchange opens. And so a lot of times you still can catch things at mid-morning without waking up at ungodly times of the night, because it's rough. I live in North Carolina, so I'm on Eastern Standard Time as well. But if you live in the Midwest, you're talking about what, waking up at really not even going to sleep. You're talking about 1:32 in the morning. So that is brutal. So I just, want you guys to, and that's what I want you guys to start looking at as well. Put these day separators up and look and see what time that your pair that you're looking at moves. As you're studying and you're trying to find out a pair that moves, look at when it moves, because it usually follows the same pattern. And you may find you don't have to be up at 3 a.m. You're like, usually this thing moves at 8 a.m. So it's no rhyme or reason. You just have to study your pair and know how it moves. It's just like honey. You study your prey that you're after.
Well, now you know that in the morning, early in the morning, when the banks open in Great Britain, well, it's 3 o'clock.
Correct.
And in Frankfurt, it's 2 o'clock,
Mm-hmm.
2 a.m.
Mm-hmm.
Okay, just like the gentleman said, now I have a job and I have to be at work at 7 o'clock. And of course now I can train myself, to be up at 3 o'clock. Because I've done it before on a demo, working on demo account.
Mm-hmm.
But now you know that the act, you know what Uncle P always says about let them get through with their activity, because it happens every morning, Monday through Friday when the bank opens up. Let them get through with their activity and be ready to look for your setup. You see a good setup, place your trade about anywhere from 30 to 45 minutes to an hour after the money maker, their activity, after they finish their activity, the market makers finish their activity.
Mm-hmm.
So I'm trying to figure out how to time that just right. Should I get up at 3:30? Should I get up at 4 o'clock?
Well, I'll say this. If you do your homework the night before, and the process that I just took you all through, I do every night, and I live on the East Coast. I do it every night in between sessions. The trading day ends at 5 p.m. Eastern. It starts over at 6 p.m. with the Australian market opening. Okay. I do that because when the trading day ends, a lot of times those the daily support and resistance doesn't show until the new day starts. And so I check it then. I go through and I write my potentials down like we just did. Okay, I write those down, or either I put them in my scanner. So that way, when I wake up in the morning, I know what I'm looking for. I've narrowed 26 currency pairs and 11 indices and all that stuff down to maybe 5. I wake up in the morning, and like I said, you don't have to wake up 3 or 4 in the morning, because a lot of times the arrows may come in at 4 o'clock, 4:30. But the way that I teach, we wait until those lines cross. And sometimes those lines don't cross for another 3 or 4 hours, sometimes 6 hours. So what I'm saying is, everybody, you may not have to wake up as early as you think you do. A lot of times, if you're organized before you go to bed, you can wake up and you know what you're looking for. And if the setup is there, you take it. If the setup is not there, you say, hey, I got to wait a little while longer. You don't take it. Or you say, you know what, it's not ready now, but I know it's probably going to happen when New York Stock Exchange opens, but I'm going to be at work. What you can do is what I just showed y'all maybe 15 minutes ago. You can set up a pending order so that when it does break out, it catches you. You don't always, and that's what I want to train y'all. Y'all don't have to be there to manually get in a trade. You can set up a trade ahead of time for something that you know there's a high probability to happen. That's what happened to me on Friday with GBP USD. I had to go to the dentist. I knew I wasn't gonna be able to trade manually, so I set it up. And that ended up being one of my most profitable trade of Friday. And I didn't manually get in. It picked me up because it broke out when New York Stock Exchange market opened. Okay. So I want y'all to expand your thinking. when you say I'm at work, yeah, you may be at work, but you can have your wishes for the system to work for you while you're working. Okay, guys? So it is clearly doable. So I want you all to expand your thinking. And we're gonna get there, y'all. We are really gonna get there, okay?